Coming off the recent announcement made by our new Reserve Bank Governor, Lesetja Kganyago, that the repo rate would stay fixed at 5.75%, I'm joined on the line by CEO of Paragon Lending Solutions, Gary Palmer, who's going to speak to us about the current trend and climate of lending in South Africa. Gary, thank you so much for joining us.
Our pleasure.
Now, South African banks have a very sort of strict criteria for lending. Why is this? Start us off by explaining why this is the case.
Well, I think one has to look back a few years and look at move to 2008. What happened was before 2008, really the access to capital was relatively easy, not only in South Africa but around the world. And then the crash came in 2008 and handbrake lending went up. And it was banks experienced a lot of bad debt. There are obviously a lot of bank collapses around the world, and thankfully in South Africa we didn't experience that. But since 2008, there's been a continued increase in bad debts. Whether it's from a consumer perspective or a bigger corporate perspective, and as a result of that, new legislations and regulations have come into play. So we've seen Basel III and the effects of Basel III. And you've seen a lot of National Credit Act came in, Consumer Protection Act came in. So, not only has it become a more borrower-friendly society, now you've got another thing called business rescue. So the banks have been a little bit more reticent to lend, given all the regulations and level of bad debt.
Do you think that this sustained repo rate could lessen some of those strict criteria, or are we stuck with them for the foreseeable future?
Yeah, I think the two are mutually exclusive. I think that you've got, the banks trying to get a grip on the level of bad debt, and it certainly doesn't help any lender, not only the banks, but other non-bank lenders as well, when interest rates start increasing for a few reasons. One, it slows down the economy. So if you own commercial property, your tenants got a greater chance of defaulting on their rents, or if you are in lending and your borrowers will be under more pressure because their disposable income is reduced. So definitely an increased interest rate environment is not good for the economy and not good for lenders. So I think that the banks, whilst it may improve their bottom line because as interest rates increase, that there is a thing called an endowment effect. It's better for the bank's bottom line if interest rates increase. But having said that, you don't want your borrowers to be under any financial pressure. Separate to that are the regulations that we spoke about a little bit earlier. Those are here to stay. And now, with Basel III as an example, the next round of the level of regulation is maybe disproportionate, to what's actually happening in the economy in South Africa. Overseas, where you had all those bank collapses, it's completely understandable, but the banking environment in South Africa is good. It's got good controls. As a result of that, we didn't see any bank collapses. But, unfortunately, a lot of these regulations are putting a strangle on the bank's ability to lend more freely.
Gary, could this be why we see in South Africa a high number of schemes like stokvels or informal lending happening? Could this be because it is difficult for the banks to loan money?
If you talk about from a lending perspective, and there's also other side of the balance sheet is the savings. When you mentioned stokvels, when you were referring to a level of savings in the economy, and I've actually, out of interest, done quite a lot of research into the savings culture in South Africa, it's massive, but unfortunately it's almost informal. So the stokvel environment is an informal environment to save, and you might ask, well, why don't the people just not put money directly with the banks? And I think often culturally, there's a degree of mistrust, to say, well, is our money safe within the banking environment? So I think a lot can be done, given our the low savings culture in South Africa. A lot needs to be done, to improve the savings culture in South Africa. Because at the end of the day, if you've got a strong savings culture, there is a buffer in the economy that should things slow down, at least there's a fallback position to access savings. Unfortunately, there's a low savings culture, so we don't have that buffer to protect oneself as the economy slows down. Then obviously what fuels the economy is the level of gearing. I mean, the level of gearing and debt in the economy is directly proportional to GDP growth. So, when the banks are, pulling back on their lending to, especially to small to medium-sized enterprises and to entrepreneurs, those entities fuel the economy. And if they can't get access to capital, it will really slow down the economy, and that's what we're seeing at the moment.
So it seems in a way that there is only a certain amount of loans that the bank can dole out to South Africans, and in a way South Africans are almost competing for those loans. So what makes me or you or the person watching this video a sure bet for the bank to loan money to? What can we do? What steps can we put in place to ensure that we are the type of candidate who is able to get a bank loan if we need one?
Yeah, I mean, the banks look really at one major point, and that's affordability and the ability for a client to service their loan. In the past, what we saw is, the banks could maybe take a view on certain transactions given the loan to value, the amounts of money people require or companies require against their security, and also banks could take a view on the probability of transactions turning out well and take a view. Unfortunately, with all the regulations and given what the banks have experienced in the past, they're looking at serviceability. So if it's funding for your business, they want to see sustainable cash flows to service the loan. So they want to see a 3-year track record. They would like to see, that's if you're borrowing money in your business, for your business. So they want to see a track record and the ability to service the loan. If you're an individual, they would like to see your salary slips as well to make sure that you can service, for example, a home loan. I think one of the days where you would arrive at a bank and say, listen, I can't demonstrate serviceability, but the loan to value is low and my forecasts look good. The banks can't take that view anymore. So, where people are really falling down, especially entrepreneurs and self-employed people. And the ironic thing is, if you're self-employed in South Africa, it's very, very difficult to get a loan. So we've been approached at Paragon many times by people who run their own business are battling with the banks because, if you're in Australia, as an example, if you're self-employed, you've got a greater chance of obtaining funding from a bank than if you're salaried. Other way around in South Africa. We don't really have a culture in South Africa of really rewarding and recognizing entrepreneurs, which is a huge pity because that, if one did, it would really fuel our economy. So, the banks would look at affordability. So if your business is going to a bank for a loan, or if you're going in your personal capacity, one has to demonstrate that you can service the loan easily.
Now, Gary, I'm sure that in your capacity as CEO, you watch our new Reserve Bank governor very, very carefully. How do you think that he did with this first interest rate announcement? And do you think that he's going to continue in this generally positive vein in the eyes of the South African public?
Well, I think it was, the keeping interest rates, where they are and flat is excellent. I mean, really for the economy, it's excellent for people that have currently got gearing. I don't think that, average consumer in South Africa, where GDP growth is at the moment, which is really stuttering, I don't think the consumer or businesses can afford to take on another interest rate increase. So it was welcomed, keeping interest rates flat. And certainly, if it remains in that way next year, it will be a positive thing. Unfortunately, I think, it all depends on inflation. If inflation starts, ticking up again, if oil prices start, increasing, if our rand starts devaluing, unfortunately, they will be left with no choice but to increase interest rates. So certainly, whilst interest rates are, remaining flat, we should enjoy this period, hoping that they won't increase next year.
Well, that's certainly the hope of all of us South Africans. Gary, thank you so much for joining us today.
Thank you very much.